Welcome everyone and thank you for coming back to my channel. I'm not gonna do any intro, anything to bore you too much. I'm just gonna go straight into the comment. I get a lot of information about what's happening in the market. So today I just want to explain easy how to manage a trade when you enter it without losing a lot of money. The first rule in investing or in trading is survival. When you make money, it's actually a very good day, but you have to take in consideration there are also bad days when you lose money. You need to know about risk management. Risk management is probably the most important thing in trading because that's how you can be successful. That's how you can grow your portfolio day by day, minute by minute, depends on what time frame you trade. You don't have to over trade. You don't have to do like 50 or 100 trades per day unless you're staying in front of the computer all day and you are really good. One thing about trading, you can know or you know how to read, you might know how to read the charts, but if you don't have a specific risk management that it's gonna create a profit for you, then at the end of the day, it doesn't matter if you know how to read the charts. And reading the charts is not really hard, it's just how to implement those information that you have in front of you so you can get profit. So, first of all, I just want to explain how I enter my last trade. So far, I'm sitting in a good profit, like over 100%. But a lot of people they say, "Oh, this guy made a lot of money." Depends what's your account size. Let's say you trade your account. It's somewhere, let's say, pretty low, $100. You don't have to enter all that $100 in a trade. You can enter smaller amounts in case if the trade goes against you, you can lose some money, so you have more money. I mean, you have some money left for the future because you want to be in this game for a period of time. You are not like a gambler where he goes to a casino and he throws $100 in a slot machine or on a table or roulette, and then 2 minutes later, if you're out of luck, you gotta leave the casino. So first of all, it's all about risk management. So yesterday I entered a trade right here where I put the buy signal. The price was 10,588 actually. And what made me do that? So first of all, you see that we're going a little lower in this downtrend. We hit this level here, and the lower you look on this indicator that it's actually pretty good, you get a green dot. The green dot it's saying that the seller pressure is very weak and it might be a reversal. Reversal meaning the price can go higher. So what I did, I waited. I didn't enter a big amount over there. I just waited. And the trade goes higher, but it hits this resistance line. Resistance line means the price gets, if you look closer, it gets to this point at this level that it's 625, 10, 625, but when you look on the left, you see that's becoming like a resistance. So if it doesn't go through, it's considered a resistance. If it doesn't go lower, it's considered a support. So these are the first things that you learn in trading: resistance and support. The more touches you have on the resistance, the highly chances to break it. So as you can see at this level here, um, the the price, it hits this resistance, it bounces down where it hits this support. As you can see, it was touched here, here, and several times here. It was a resistance, here becomes support. Here it gets through the support, it bounces back up, and is uh, flopping and groping over there for a period of few hours. Then it goes up higher and it bounces back down. From that moment, it goes high. So at that level, what I said, I'm pretty confident because I see this line here, the green dot coming here, and if you want to draw a line, uh, look at this angle. compare with this one. So it's pretty similar, yeah. So it's you can have it as a confirmation, then the price it might go higher. So I enter the position right here, and I also put a stop loss right above this level here. I didn't know what's gonna happen here, so I put the stop loss right beneath this line, yeah, around 535. Actually, it was 540. So you have a tool here that it's calculating uh, the risk to reward. So I put my stop loss at 545, and I was aiming for my trade to hit this price. Yes, why, you might ask? Because it's a lot of chopping action here, but I see definitely some sort of resistance slash support in this area. So when I enter that, as you can see here, the risk to reward is 3.61. So basically I'm risking this amount to get this profit. And how you can do that? Well, plain and simple. If you put $100 here, so basically you're risking $100. If you're going, or $10, let's say $10, because you have an account that it's $100. So for $10 entry at this level, you're risking that $10 that is going to go against you. So basically you will lose that $10 and your account will be left with $90. If it goes where you want to go, you make 30% profit. Well, what I did, so let's delete this. I put my take profit first region. This is another lesson that you have to take in consideration. You put your stop loss at the level and you're out for that trade. Well, if the trade goes with your calculation and you are in profit, what you do, you can take some money out from the table uh, in profit and let the left of the trade to right along. So when you are in this situation here and you are in the profit, what can you do? You move your stop loss, so the level that you said I'm willing to lose all this money at this level that I said it was 10,545, you move it right at the entrance. So basically if the trade goes against you, you can be free. You don't lose any money. You left some money like winning, the money that you are winning, but they don't become a loss. So what I did, I got out with no money. And what I did after that, I waited a little bit longer, and I see this candle formation here. This candle, it shows a reversal, because a lot of buyers and sellers, they are not convinced that what's going to happen with the market, but you see the candle closing at this level, that it becomes as a support. So what I did, I waited a little bit and I put again the same entry that I had before, $10,585. So again, I put my stop loss here. So even at this trade, I didn't win nothing. I try and I enter another trade at this level with the same stop loss. And guess what? The trade goes with me. That was a confirmation for me that the price is going to go higher. If you look at this indicator here that is showing the momentum, this momentum here it's pretty low, and this momentum here it's a little higher, right? As you can see. But if you draw the line from this level, let's do it here live so you can see, you connect the dots from this level all the way to this level, and you see the price actually goes lower. That means the price is diverging with the momentum, so the momentum is increasing, pushing the price higher. And we had the confirmation about the candle that I explained to you right here, that it's going to be a reversal. So when you have this kind of formations, you're pretty confident that the price is going to go higher. So I was really comfortable, and in the morning when I woke up, I see that the price reach my first target, the first target. So I'm not taking all the money out. Imagine, I don't take all the money out. I took 30% of the first, the profit that I made right here. I immediately move my stop loss at the level that it's higher than the resistance, right? The resistance becomes support. So I just put my stop loss here. If the price would reverse, I will still be in profit. This range plus this range. I don't know if you can follow me. Profit taken right here 30% at this level, move my stop loss at this level. If the price would go down, I will still get this profit. So it's 30% here that I eliminate, that I take profit, plus the rest 70%. So accumulating this profit, let's say it's $30, plus here another $40 because you move your stop loss, you get out on a trade with $70 profit. Depends what's your position size. Again, and nothing happened. The price didn't go down and it goes push higher and higher. Well, what I did at that level, I said I'm gonna let the rest ride. So the price reached this level, the 10,930. I took another 30%. So I took 30% from my original trade here, 30% another here. So that means the risk to reward, it is pretty high. So the original trade, it becomes right now 6 to 3 risk to reward. So my risk, it's very low compared with the profit. And I took another 30% out. So right now in this original trade, I am left with 40% from the original investment that I put it right here in a trade, and I'm riding along. What I did, I moved again my stop loss to a higher level. Why I did that? So basically right now my uh, stop loss, that it's actually is not a stop loss, it's actually still in profit. I moved it at $10,815. So if the price is gonna reverse to $10,815, I will not lose anything in this trade. You accumulate profit over profit. As you can see here, price might come down to that level because you kind of have like a higher level here that it's gonna probably reverse. So you see this line here, this mountain peak here connecting with this peak is kind of the same, while here it's pretty exaggerated. So being exaggerated, you might expect a price reversal. But again, you have to remember all this thing, it's done because you enter the trade and you will not lose any money. Thank you so much, and I'll see you in the next one. If you have any questions, please leave it in the comment, like, subscribe, and share it with your friends. I'm just expressing here my knowledge that might can help you with achieving profits in a trade. And think about this, it's not late, it's never late to learn something new. Take care, my friends, and I'll see you in the next one. Bye bye.